there will be defaults everywhere, but how specifically are we talking about the financing pressures you're seeing in the property space?
Well, look, what we've seen in the 8 weeks since Chinese New Year, sales activity has been very low for the first 4 weeks, and in the most recent 4 weeks, while sales have recovered, they remain around 30% behind the equivalent point of where they were in 2019. As you said, developers rely on pre-sales as a substantial part of their financing for future cash obligations, and therefore the gap that you've seen build up over the last 8 weeks will have knock-on implications for later in the year.
So what can be done at this point for developers to alleviate cash flow?
Well, as with all companies, cash is king, and particularly in times of crisis or times of stress like this. So we're getting lots of inbound inquiries from our developer clients, helping them to understand cash, both their ability to forecast cash inflows and outflows, what they can do to preserve cash and what they can do to raise cash levels. Some of the things that we're seeing include slowing the rate at which they're purchasing future land plots. We're working with some developers to help them sell land that they've bought in the past. And instead of developing the land, they're then flipping it on to other developers because they can't raise the financing for the capex needs. And the other thing that we're doing is we're working a lot with private debt funds and other types of institutions here in Hong Kong, China, to help them structure creative financing deals to help the developer community.
We have seen a lot of volatility in the offshore US dollar bond market. What does this mean for these developers then?
Well, it's another headache, is the short answer. We've seen most developers' bonds in the US dollar offshore markets fall from 97, 98 cents in the dollar down to pricing anywhere between 75 cents and 85 cents. If you look at bond issuance, following 12th of March, there's effectively been very little in the offshore market. And that means that developers that were relying on issuing bonds to either refinance existing bonds or to raise surplus funds for other activities effectively have been shut out of the market for this period.
What should existing lenders do in order to minimize risks?
Sure. Well, look, I think both in Hong Kong, the HKMA, and in China, the CBIRC, have put some pretty clear guidance out about the need to be forgiving and patient with borrowers who are facing stress at the moment. So the volume of insolvencies at this point isn't up, although we would expect that to increase in the second half of the year. The same thing for some of our banking clients, we're spending lots of time with them, helping them to understand, really engage with the borrowers, understand what are the specific issues and how much of the challenge is temporary versus longer dated.
In terms of how much this kind of changes buyer behaviour overall, obviously, you look at those kind of crowded sales centres as well as what's going on with construction sites. How long-lasting will the impact of some of these restrictions and just the psychology of consumer behaviour last on the industry?
Well, I think a clear part of it is the need or the wish of the consumer to stay away from crowded public spaces. So I think some of it will naturally recover once sales centres reopen and once confidence returns. And the question of the timing for that, of course, is uncertain at this point. I think you've got to remember in China that real estate pricing, particularly residential pricing, has risen consecutively for a number of years now, decades. And therefore, the sentiment on the consumer or the retail investor who puts capital into real estate, it has been an asset class that has risen steadily and has been a source of wealth creation. And I don't think that disappears overnight.
What are you expecting when it comes to more government easing measures for the property sector?
Well, to date, we've seen pretty targeted and specific measures. So, for example, in some cities, we've seen government or finance bureaus give developers extra timing to delay payments on land banks or other activities or tax payments that they should have become due. So there's been some quite specific measures at the real estate sector to help tide over this period of cash tightening.